Hey, good morning, everybody. This is Kobe Rex. I am really excited to be making this video today. We are not in a tie and jacket today because this is the teaching session. And teaching session is where we get down and dirty and go into some very specific cases that I want to help explain for you. So, as this is called, best financing secrets for your home purchase, down payment, buy downs, and points. So, there is not a one size fits all sort of advice on exactly what loan you should be doing in every situation. You should not always be putting down X percent. We all know, we've all heard 20% down is magic, but there's just a lot of different options. So what this is going to be a 4-part series. So I want this to be today an overview. So that way you can get a good feel of the whole landscape for how things look and where we're going to go as a roadmap. And then on each of these different sessions we're going to do, and I think the last one's going to be a special Q&A where you can actually ask live questions to me. I really think this is going to give a lot of value whether you are a buyer, a seller, or a professional like a realtor. I think this is really going to help. So let's jump into the first one, which is simple, which is down payment. So basically, when you're getting into a house, you have what's called down payment and closing costs. So down payment is typically what you hear of. For VA, there's a lot of times there's 0%. For conventional, for some home buyers, 3%, FHA, 3.5%. And then certain programs, 20% means no private mortgage insurance. So there's just so many different variables that you've got to consider. And in addition just to your cost of getting to the home, there's just a lot of costs with moving, furnishing the place, getting help to get there, that a lot of times just magically saving money down the line is not where we need the money. Sometimes we need the money now so we have peace of mind that we didn't just over leverage to get into a house, that now every time you're having to take that mortgage payment out, it's a huge pain. So I like having some different down payment strategies. And in some of the other sessions, I'm going to talk about some special programs. There's specific states too. There's a program by Chase. It's a community seconds program that it's called Home Run, where like there's certain programs in certain zip codes where you can do 3% down for in certain cases, 3% down, and there's no private mortgage insurance. As with everything I say, especially when I start quoting rate and I start quoting terms, please talk to me and I can address your specific situation. I'm going to link my thing in the chat and in the description so that way you can look at this later. Okay, so now the next two things. So buy downs and points. Everybody always wants to know, what's my rate? But what they don't realize is that there's a lot of things that go into how that rate is determined. And now with buy downs, which you're probably going to see a lot of from builders and different people, what you're doing is you're for a specific amount of time buying that rate down. So in an complex environment where you're having to consider what interest rates are doing, what tariffs look like, what all these different things are, having a cohesive strategy that is indifferent. Where do we want to be in 2 years? Where do we want to be in 7 years? Where do we want to be if we want to refinance? So all of these components coming in together are so important when you're choosing how to put together a loan. A lot of people just want to go in and make it simple. And dude, there's so many lenders that can go out and do this simply. I like being simple with options because this is a big decision you're making, and it shouldn't just be quick, easy, fast. There's a lot of push. I do leads. I get pushed. There's a lot of people that expect me to do push button, get mortgage. But for me, especially when you get into those more sophisticated purchases, it's a lot more interesting to consider different options. And in addition to just short-term changes in your rate for a year, or 2 years, or 3 years with the temporary buy downs, points are another way where basically you pay the premium to have a lower rate. So it's a percentage of the loan multiplied by the amount of points, and basically you bring those to closing, and that allows you to get a lower rate over the time of your mortgage, and it won't adjust. Additionally, there are adjustable rate mortgages. I don't do a ton of those, so not really going to be what I'm going to be talking about. But what I am here to do is I'm going to talk about how to use these 3 levers: your down payment, your buy downs, and your points, so that way you are putting yourself in the best position possible. I cannot wait to go on this journey with you for the next few weeks. I would love to see in the comments and have you ask me whatever you want in terms of these specific areas that you want me to go into. And I'm really looking forward to seeing a lot of you on the Q&A later. As always, if you want to start your home buying journey, or if you have any clients that need to start their home buying journey, please look at my link in the description and would love to start an application with you. And I cannot wait to make this year your best year for homeownership yet. Have a great day.